right. Happy Monday, February 12th, 2024. I get a lot of emails and questions and texts. Chris, where are rates at? And so I'm getting back to my Monday rate update for everybody. We'll just go through a whole bunch of loans, loan scenarios, loan options, and see where rates are. So let me show you a little backdoor access. This is the mortgage brokers' bread and butter here. So this is called Loan Sifter. And what we do is we come in here and we put in some parameters, and then we walk into 40, 50, 60 banks sometimes, depending on how many are pricing, and make all the lenders compete, right? These are wholesale lenders. These aren't big institutions on the corner of every major intersection. These are dedicated wholesale mortgage shops. And let's dig in, get some rates to everybody. So let's just say we're $600,000 purchase in town in Colorado. Let's say you're putting 30% down. Let's just say 25% down. And first lien position, great credit, primary residence, single family home. Let's see where rates are. Now we're going to walk into, dozens and dozens of lenders at once. And we can see here, these are all the lenders that are pricing, okay? From best pricing to worst. Our best pricing lender right now is at 6.75 with an APR about 6.774 with a credit back of $1,449. So what's that credit back? You can use that to pay for, various third-party closing costs like title, okay? And so you scroll down, and the worst pricing lender at that same rate doesn't have a credit back. They have a cost of $11,000. These two down here costing $95. Let's just ignore those. That's not even allowed. But yeah, the worst pricing lender is at 6.75, and that would come with buying down to the tune of $11,000. So that's why we wouldn't be going to him. So yeah, 6.75 with an APR of 6.77, 30-year fixed, 25% down on a single family primary residence. Let's look at some others. So the most common are conventional, but let's look at FHA. Same loan details, FHA. Just remember, the devil's in the details. So less down payment, different credit score, all these details matter. This is just a sniff test, okay? So sniff test on this scenario, FHA would be at 6.125 with an APR of 6.643. Why is that APR more, why is the spread more different? Different. There are costs to FHA loans. It's a Govy loan, and it comes with mandatory mortgage insurance, and there's a funding fee. And so the APR is considering the costs of these loans. And that's why you want to kind of compare the rate you're being quoted to your APR. I won't get too far down that rabbit hole, but that's the quick nitty gritty. Let's look at one more. Let's look at a VA loan. So we'll look at same great credit, 25% down. You're a veteran, buying a primary residence in Colorado, 30-year fixed, 6.25 with a $1,700 credit with an APR of 6.391. Okay, let's take a peek at investments rates. I'm going to change this to investment property. Everything else is the same. We're not going to do a VA loan on investment property because you can't. We're going to do a conventional, do a purchase. I'll tell you, folks, the lenders want to see more skin in the game from these investors. And so I'm going to go ahead and put 30% down on this. And let's see where they're pricing on an investment property. 30% down. See where lenders are at. Walking in. Searching. All right, investment property starting at 7.125 with a $1,500 credit back. That's our best pricing lender. Worst pricing lender, 7.125 with a $14,000 cost. There's the difference between the portfolio of our lenders, and these are all the lenders in between. Okay, so if someone came to me today, we would be and they wanted to essentially middle the road rate on a 30-year fixed, 30% down on investment property. We'd be at 7.125 with a $1,500 credit back, and they'd use that $1,500 to pay for, title fees, taxes, insurance, anything in the closing, closing costs. So that's the nitty gritty for today's rates. Let's talk about a few others that aren't in Loan Sifter. We've got our Alt-A loans. So that's the bank statement loans, the DSCR loans, right? Debt service coverage ratio loans, the loans that aren't sold on the secondary market to Fannie and Freddie. And so once you get into that next kind of tier, things are more expensive, right? So DSCR loans, I mean, those are investor loans, right? And I'm seeing those start in the mid sevens, so 7.5. Now, again, the devil's in the details, right? So there's going to be a difference in the rate of a DSCR loan where the DSCR is 1.6 versus 1.1, right? Quick review of DSCR: if the mortgage payment is $1,000 a month and the income is $1,200 a month, right? The rent is $1,200 a month, then you'd have a DSCR of 1.2. Okay. So you're seeing those DSCRs and those Alt-A loans live in the range of, say, 7.5 to say 10%. And these are for investors, right? And then you have your hard money, and I lend hard money. That's my hard money private lending logo right there, Acres First. And the hard money or private money for flippers, for bridge loans, starts around 10% and goes up from there. What's really common, say for flippers, for example, is 10 and 2. So 10% and 2 points. We often do 14 flat with no points, and it goes up from there. I've seen hard money lenders lending money at 16% and 4 points. So again, the devil's in the details, but we have this range. We went through, the govies are the lowest, VA, FHA, the lowest rates you're going to get. Then you got your conventional, then you got your Alt-A, your bank statements, and your DSCR loans. And then you're all the way up to private lending or hard money, which is in the double digits. And that's what I got for you, folks. So it's like that. Hope that helps. Of course, if you want to, give me a call. Well, let me present my contact here. And I will see you all next time. Where's my contact info? There I am. Look at that picture. That's pre-gray hair. There's my NMLS number, my phone number, my email, and a picture of me without any gray hairs. Look how young I look. Anyway, it's like that, everybody. Happy Monday. Happy February. See you next time.